March is off to a volatile start. What is going on, everyone? Jeremy Ritz here. Courage pays better than fear trading. Happy Tuesday to all of you. March 3rd, the second trading day of the month. I hope you guys had a phenomenal one. And the tension between the United States and Iran persists. The war, the conflict, whatever you want to call it, however you want to describe it, it continues. And today we saw the market, pre-market, we were down about 124 points on the S&P futures. That carried over into the open. We saw more pressure down on the broader indices, QQQ, SPY, IWM, Dow Jones. We even saw Bitcoin, which has been strong here in the face of this tension. It was struggling as well, and it was just a sea of red outside of a handful of tickers. But as the day wore on, we did see buyers start to come back in on a handful of stocks, not everything. And I wouldn't say that it was a ton of buying. You wouldn't call it bullish from any point of view, but there was some interest at the levels that this market dropped to from your buyers. And if you look at the SPX chart, we actually went below the December lows, which is important. And we talked about that if you break below those December lows, now it's not a close, we wick below it, and actually there's a pretty massive hammer candle after hitting that area. So is that indicative of a bounce that's coming in tomorrow? We don't know. But we breached those lows. We got a bounce. Buyer stepped in. We finished down a little over 60 points on the SPX. And we're just going to have to wait and see what happens from here. And the way these last 2 days have played out, we've had two massive gap downs. You had buyers step in, push the market up just a tiny bit. But we'll have to see if tomorrow follows the same suit. Do we wake up to another major gap down and then it gets bought up and it's just a step down with people buying along the way, and it just drips and drips and drips lower? We correct, we come down 5%. We're not even down 5% yet on the SPX. We didn't come down 5%. We didn't hit 10% on the Qs. So there is a lot lower that we can go. We've talked about the longest time looking for that catalyst that will send us lower, and potentially it's here. And just to come back to what I talked about the other day, it's all going to depend on how long this plays out. How long does this war rage on before resolution? Are both sides going to be willing to come together and work out some type of agreement? Is that going to be possible? And we're also seeing, because of oil, we're also seeing an impact on oil prices. We're seeing oil prices spike, and there's concern that that's going to drive up inflation. And if you drive up inflation, and if we're talking about the stock market, we know that that means probably not going to get rate cuts. Or worse yet, if this persists and lasts for a long time, does it spike inflation to the point where you have to raise rates? Now, again, there's a lot we're conjecturing about now, and we don't want to get too far ahead of ourselves, but the sooner that this can be resolved, the better, most importantly, for humanity, for our United States troops, for innocents. And so we want that to happen. But in terms of the market, a faster resolution means that the market can resume what it's going to do. But again, we are due for a pullback. And maybe that's what's going to happen. Maybe we're going to get 10% before the week's over. Maybe we'll just continue gapping down into every pre-market, and it'll get bought up, and it'll just keep dropping lower and lower and lower and lower. We hit that 10%, and then maybe that'll suffice for the next move up. Who knows? But the ultimate takeaway here is uncertainty persists. It's here, and who knows for how long. So we better get prepared for it, because this is the state of the market right now that we're going to be trading for the foreseeable future. So that's all I got for you today. It's a twilight episode here of Driven. Most importantly, make it a great day, honor the moment, and as always, be grateful. Take care, everyone.